Hi, everybody on Facebook at home. Thank you so much for tuning in. We are here live in our homes. We're excited to have this casual conversation just about some of the questions that we get. Me as a realtor, Liz as an attorney, and Dan as a lender. We get a lot of the same questions from different people. So we feel like, just having a 30-minute chit chat, answering some frequently asked questions may be helpful to you, as you're winding down Friday afternoon, right?
That's right.
Absolutely.
What was that?
I said, absolutely.
Definitely.
Time to wind down on a Friday afternoon.
Exactly. So to start off with, introducing you guys. So my name is Leo Young. I'm a realtor with Compass. I work out of the Boston office. I help people buy, sell homes, rent out places, and happy to be here.
Awesome. And I'm Liz Barletta. I'm a real estate attorney with Liggers and Associates, based out of Boston and Newton, and just excited to be here, chat about a lot of questions that you guys may have. Like Leo said, we get a lot of the same questions, so it's a great opportunity to kind of just inform everyone in this space. So thank you for having me.
And I am Dan I'm with the Mortgage Network out of Danvers, Massachusetts, but lend up and down the East Coast and into the center part of the country, and been playing the game for a long time. Hope we can answer some questions that people might need.
Awesome. And Leo, I feel like everything needs to start with you, because at the end of the day, the majority of home buyers out there, the first step is really talking to an agent. So maybe you can kind of just chit chat about the process of buying a home and how one gets started.
Yeah, definitely. So as far as, the process goes, people always ask, when should they hire an agent, right? And that question is so interesting to answer, because there is no concrete rule as to when you should hire an agent, because different people, they have different preferences, different situations. But most people, they choose to hire a realtor probably around 3 to 6 months of them wanting to buy a home. And I would say just a gauge of when you should do that is when you're mentally and financially prepared to buy a house. You don't want to just buy a house to buy a house, right? You want to be ready for it. And when you are, speak to a realtor, speak to an agent. But also at the same time, don't let that stop you from, building relationships ahead of time, with other agents. There's a few benefits of doing that. If you're just speaking to a few agents, maybe you can understand, like, hey, maybe your personality is better fit with that agent, and it's good to have some leeway beforehand to realize that, and just learn useful things about the buying and selling process.
Yeah, I feel like it's interesting because a lot of people that I talk to, they say, oh, I'm not looking for 6 months. That seems like such a long time. And they're like, I'm not ready to talk to anybody. But it's so not true. Like, it's so important to, like, even if it's in your mind that this could be something that you'd like to do, it's so important to talk to you just to kind of understand the whole process, right?
Yeah, definitely. And I mean, just as a realtor, yes, it's like our primary job to, like, get you from start to finish, from, like, speaking to us to getting into your home. And through that, there's no hard set in stone process of, like, do these things and you'll get there. Everyone is different. So definitely play around with it, see how you feel individually, and just have an open mind and be receptive to learning.
Yeah, that's so helpful for sure.
Mm-hmm. And just curious too, for Dan, like, a second question that I get a lot too are, if you're buying a house, like, what should you plan for, like, down payment wise, like, how much should you plan for, like, closing costs and things like that?
That's a great question, Leo. And everybody's different. And that's the first thing I tell everybody. Everybody's different. Every transaction's different. And the market itself is always liquid, right? So the market is always moving. And in some markets, it's, you're not going to be able to get, quote unquote, the best terms in negotiating with the seller. And in some markets, you get great terms. So on a minimum, you want to be in a position where three things are happening in your life. Number one, your credit is stable. All right. And I know, Liz, you had mentioned, we'll talk a little bit about credit and what do you need for credit scores and all that. You want to be in a position where your credit is stable, not jagged. You're in a good position where you're making all of your monthly expenses now. And you are in a position where you are still able to save money while you're making your payments, number two. And number three, you want to be able to go into a situation where the payment's not going to be a great deal more than what you're spending now. Okay. And that's, we call payment shock, right? But as far as down payment goes, everybody's different. I do a lot of VA financing, 0 down, and literally almost no cost into the transaction for veterans. So we structure it that either the seller pays the closing costs or their down payment assistance programs or closing cost assistance programs that we help out with. So everybody's different. Right now in the greater Boston market, terms are difficult. It's a heated market. Sellers aren't going to pay closing costs in most cases. So we've got everybody coming in with 3.5% to 5% minimum down payments and the ability to pay their closing costs over and above that. And closing costs can be as much as 3% of the loan when you start talking about property taxes and insurance as the prepaids. So we get into more details. Go ahead.
Yeah, no, I was just going to say, because you talked about credit just briefly, and I think it's so important because somebody who, again, like talking about timing, who may not even be thinking for like a year from now, 2 years from now, but having a conversation with you now, Dan, is so important because you may have, credit score that you don't expect because maybe you get your monthly statement from your Discover card and it shows you a credit score that ends up not really being the credit score that you need to qualify. But then you can give them tips on like how to improve that and like have a game plan, because I've had so many clients recently who were like, yeah, mine's a year away. And then when they saw how much they can borrow with the interest rate so low that they're making, their monthly mortgage payment ends up being cheaper than what they're renting, that sped up the process. So I always feel like it's so much better to just, if you even have an inkling that you want to buy a home, like talk to Dan now, basically.
That's a good point, Liz, because we look at, what's happening in the overall market right now with interest rates as low as they are. And, even if we take a standard baseline of 4% interest rate, for instance, right? The difference between a 2.5% interest rate that might be available this week and a 4% interest rate that's a standard baseline rate, you can afford $50,000 to $60,000 more in the average home. It's a big difference.
Huge difference.
Big difference.
Right.
And
it's pretty crazy. I mean,
maybe
how low the rates are too.
I'm sorry?
It's pretty crazy how low the rates are too.
They're phenomenally low, and they've been phenomenally low for a long time.
Mm-hmm.
It's not going to stay forever.
Right.
We know that for a fact. It will not stay forever.
Yeah.
Don't know how long it will be, but if you're considering buying in the next year, let's talk, because we don't know how long it's going to stay.
Definitely. And just for a point of reference too, do you remember, Dan, off the top of your head, like what the mortgage rates were maybe like last year or like 3 years ago, 5 years ago?
So we've been relatively stable in rates for the last couple of years.
Mm-hmm.
But when I say relatively stable, rates have gone between 4% and 2.5%. But certainly, I'm probably, if I take the combined ages of both of you, I might be there. But I certainly remember lending when interest rates were at 18%.
Wow.
Fixed rate.
I remember my parents' first home, 17% interest. And it was just,
my first loan was a 5-year ARM at 12% that the developer gave me because he couldn't sell the property. It was the worst property in the development. And when he gave it to me, he lent it to me personally. When he gave it to me, I hugged him.
That was a deal.
It was way before COVID, but I hugged him.
I can't wait to hug people again.
There you go. It's coming soon. It's coming soon.
I hope so. Well,
Okay.
on that note, sort of Leo, I feel like another question to chat through, we've kind of touched on like the competitiveness these days.
Mm.
So how are you making offers competitive for buyers, and what does that look like? You know, maybe go through that a little.
Yeah, and it's so relevant right now because the markets are so hot. I was just telling Dan recently. So I took one of my clients out to see an open house over the weekend, and so we got to the open house like a minute early, right? And there was like a whole line of people there already, and we had to wait like half an hour to get into the house, which is crazy, because I can't even count like how many people are there. Probably like at least 50 through that open house just in one day, and you're probably going to get like, I don't know, 10 offers. That's not even exaggerating. So definitely, Liz, like it's super important to make your offer stand out, and there's definitely different ways that you should, strategize with your realtor to sort of make that happen. Because, in people's minds, yes, like there's the price, but there's also the terms. Those are the two key points in an offer, or like the key factors you can play with. So like price, obviously, how much you offer, like the deposit amounts, those are some of the things you can play with. Versus terms are like the time to close. Some people, if you can close in like 30 days, that would be a lot better than 90 days, for example. But also, maybe waiving certain things depending on how the situation is. Some people waive inspection contingencies and things like that. They tell the seller like, hey, I'm not going to make a fuss with the inspection. I'm just going to do it so I understand what I'm buying. That's definitely a way. But of course, like every situation is different. Every house is different. So I would definitely recommend strategizing with your realtor, just to make sure you have a winning offer.
That's awesome, because I feel like that is such a great perspective to have, because I feel like there are a lot of agents out there that they aren't necessarily thinking about strategy with their client. They're just like, we need to do this to get your offer. And then like the buyers are like, I need to get something. And they're just kind of going with it, but they're not necessarily even actively part of the process. They're just kind of going and following. But it's so important that you have that perspective, that you really engage your clients and make sure that they feel comfortable in whatever like strategy that you all come up with together. That's so important, and not seen all the time, people listening. So make sure you call Leo.
Yeah, absolutely. I mean, this is like an interactive process too. A lot of the times, I mean, depending on the person you are, like I said earlier, some people are just like, okay, Leo, I trust you completely. Do whatever it takes, get this house. And then other people are like, well, let's think about it. What would this mean? What does like moving up the inspection date mean? Things like that. So it's a dynamic process, and that's what makes this job so fun.
Yeah, definitely.
What?
I agree with that.
Yeah. Now, just speaking of like the closing process too, I know, Liz, that's typically when like the attorney sides come in. They help with overseeing the whole transaction, and like how and when do your offices, like the attorney's offices, get involved with the home buying process?
Great question. Yeah, it's like one of the number one things. So whenever I get introduced to a client, I actually call them to kind of walk them through this process, because oftentimes they've never really thought about the attorney in the process. And so it's really nice to have the person who's going to be helping them actually explain to them what their job is and what they do for them. So I answer this question a lot because I think it's so important. So essentially, the majority, I would say 75% of the time, the agents that I work with or the loan officers I work with end up introducing me once the offer has been accepted. So that's generally when you're going to see the attorney get involved. So once a deal is actually confirmed. The reason for that is because the next legal document a buyer has to sign after the offer is what's called the purchase and sale agreement. And it's similar to the offer in a lot of obviously the same terms that have been agreed in the offer find their way into that document. But it's a for the most part, a Word document prepared by the seller attorney, So of course, there's a lot of language in there that's sort of seller skewed. And it's a job of the buyer's attorney to go in there, make changes, add different provisions to actually ensure that your rights as a buyer are affirmed, and also that we can protect your deposit as much as possible. And it's also a vetting process for discovering information in about the property and what the seller's knowledge of that is, because we are a buyer beware state. And that's why a lot of people tend to try not to sort of waive an inspection, or still do one, but maybe just for informational, just so you understand what the property has, which we see a lot. Because in reality, there are only two things that you must disclose as a seller. That's if there's lead paint or if there's a septic system. Everything else, unless they don't have to disclose to you unless they're asked specifically. So in our provisions in the purchase and sale agreement, we're asking a lot of questions of the seller in the form of representations that we want them to make about their knowledge of the property. So that's, again, one of our main focuses when we're negotiating a P&S. So I went into a little bit of a tangent, but so 75% of the time, it's once the offer is accepted. Sometimes we do end up getting involved earlier, where maybe, especially now with terms kind of getting a little bit more complicated, making sure that some of my agents, they're like, my client wants to be super aggressive, but I want to make sure that another person has explained to them exactly what the offer means. So that way no one's coming back to me later saying I pushed them into some direction. So I'm kind of being used in that way to protect my agents. So that's generally when we do get involved.
I'm finding that, Liz, that right now attorneys are getting involved earlier than they were in the past, because we're seeing a lot of cash offers. And I've explained this, and Leo and I have gone over this. A cash offer doesn't necessarily mean there's not going to be financing.
That's right.
A cash offer means that the buyer does not have the ability to get out of the transaction for lack of financing. His deposit, her deposit's at risk at that point. So in a lot of cases, a good attorney can assist in an offer to purchase and a purchase and sale agreement that protects the buyer through other means.
Yeah.
And I'm not saying we're faking out the seller, but in a lot of cases, my favorite line, Leo and I have had this discussion many times. If you have a good buyer that wants to buy and a good seller that wants to sell, we'll make the deal happen.
Absolutely.
We'll make the deal happen. It's everybody has to sometimes take a deep breath and let it happen.
I still remember my first transaction. It was like, I think it was 7 years ago. It was a client that I've worked with a million times. And it was they opened up the Globe one day and they saw like this featured property, and it was in a town that they don't even live in. And they were like, oh my God, I want this house. And they put in an offer with no mortgage contingency. And I was literally dying every day. I was this poor loan officer. I was calling every day. How are we looking? Are we good? Are we going to be okay? I was just so petrified, even though they have incredible jobs, great credit, like it was a slam dunk. I just had never seen that yet. And now it's become commonplace. So it's very interesting. But
what we have to realize, so some of the changes we've seen because of COVID, the re-verification of employment 2 days to 3 days prior to closing. So we went through this span with COVID, and we may continue to see it, these job losses. And the person that does have the incredible job making $250,000 a year, when he or she loses that job, that's not filled in a day.
Right.
So you've got these, the situations where, even though the buyer has put in a non-contingency offer because they're strong as heck, sometimes they're finding out, oh my God, I've lost my job, or I've taken a pay cut or whatever. And we're verifying as a lender, Fannie Mae, Freddie Mac are requiring that we are re-verifying within 2 or 3 days of closing. It's a big deal.
Yeah. Yeah. It's COVID has definitely put to be fair, I thought it was going to just shake this industry so much that we weren't going to be able to like close any deals, and like not the case. It's like hotter than ever. I feel like the majority of people that we work with, right? It's been like their best year ever.
It's been a very good year for professionals. One thing that we've found, and I've seen a couple of comments already start to hit our or getting messages here from some of the professionals that I know that have all been extremely resilient to this, have found other ways to do business. I tell you, this the honest to God, and Leo called me this morning. He said, "Hey, what are you going to wear on the conference call?" And I said, I don't know. I said,
Why didn't I get that call?
This is the first year in my life that I open up my closet, and I have, I'm a smaller guy, so everything's got to be custom. I have probably 15 custom suits in my closet, but I only own 3 pairs of sweatpants. So I've got to do laundry every couple of days.
Yeah, it's a different world.
It's a different, it certainly is. The shorter commute is great.
Yeah, no, absolutely.
I walk up 1 flight of stairs and I'm done, but
But what's sad to me is that I haven't seen any of your beautiful faces in over a year at a networking event, which is always sad.
I do miss network. I've been, as I just mentioned to you earlier before we started the call, I was at a networking event last week in Palm Beach, and it was really refreshing. Really refreshing.
I can imagine.
I went to a networking event in July in Orlando, and that was refreshing. I was like, wow, people, they're alive.
Yeah, I know. Oh my goodness. Well, I actually do have another question for you, Dan. So I feel like maybe just briefly talking about loan programs, because I feel like there's still that misconception out there that if I don't have 20% down, I can't buy a house. And I feel like even though I feel like everybody in the industry keeps on saying it out loud that you don't need it, it's still a misconception out there. So maybe if you want to talk about the different types of programs.
It's incredible. Actually, and it's funny. This year, I have done more FHA loans, more FHA purchase loans than I've done in the last 3 years combined, I bet. Especially early on with when COVID hit and Fannie Mae tightened up a little bit, FHA was one of the only real avenues for about 2 months to really get low down payment borrowers in. But we talk low down payments, we do FHA loans with 3.5% down. And in a lot of cases, the sellers paid the closing costs in those transactions. So, the borrower is taking, 3% down and maybe getting 3% back to its closing costs from the seller in the offer price. Of course, they've got to offer a price that the seller is willing to give 3% back. But we're seeing a lot of that, and buyers are literally getting into houses, buying that $500,000 house with about $17,000, $18,000. And it's it really is, because it's amazing how many people I've pre-approved this year that have said to me, "Oh my God, I can't believe I can afford this much."
Yeah.
I had a buyer 2 weeks ago. He's shopping on the New Hampshire, Massachusetts line, up in the North Shore. He actually was planning on spending around $350 for a home, and they're having an offer accepted, I hope, knock on wood, today at $550. So it's a big difference. And people, out there are really opening their eyes when they say, "Oh my God, I didn't realize the effect on low interest rates would have on my home payment." It's amazing.
Yeah. So. I actually just had a conversation that similar pricing, that the client ended up being able to put $100,000 more down, buy a home that was $100,000 more just because of that low interest rate. And also, I think, so one of the things I feel like we've been seeing, Leo, and I feel like you probably see it a lot more when you're submitting offers, is like appraisal contingency language, or having only agree to continue if like the appraisal comes in low, but for a certain cap. And a lot of people don't realize that generally they can talk to Dan about potentially adjusting things in the loan, and maybe even still having the same loan program or loan amount, right?
Absolutely. We are absolutely finding that. It's, we had Leo and I had a transaction earlier this year, young first-time buyer, not the best credit in the world. He had made a mistake, and we helped him through it, but he was FHA buyer that closed his loan for first-time buyer, 30-year fixed without any points, and it was 3.5% down, and we closed them, I think, at 2.25% interest rate, wasn't that, Leo?
Wow,
I believe so. Yeah,
pretty nice.
30-year fixed rate.
Imagine.
And he bought about a $500,000 home, and probably, I think he's 25 years old though.
I think so. Yeah.
That's awesome. Yeah.
Yeah.
And speaking of that too, Dan, just to follow up too, I know it's like a misconception out there. Like people think, oh, like if I have a good credit score, I can get a house. But I mean, that's not completely true, right? I mean, credit and
Not all of it.
yeah, it's part of it.
Yeah, absolutely. So we look at number one is credit, obviously. Number two is income. You have to have income to support the loan. In fact, the government says you have to, when you're buying a primary residence home, we have to verify that the buyer has the ability to repay the loan. It's a big part of the new lending laws that came out after the last market crash. We need to make sure that buyer has an income stream that can support the loan. That's the two. Number three is the asset, and that's the amount of deposit they have or actually reserves after closing to make sure that the buyer's not going to buy the house and not be able to make his first payment. So, and then of course there's the appraisal on the property they're buying. And one thing that surprised me is we really have not seen a problem with appraisals this year. I would have expected to, but we have not. With the rising prices, the fast market has supported the appraisals.
Yeah, they definitely caught up. A lot more people that I thought were fearful of, they submit something with a contingency like that, and they're like, crap, I hope I don't have to use it. It really hasn't happened very much, which is great.
Mm-hmm.
I had a buyer last week make an offer on an $850,000 listing price. He offered 1.25 million with no contingencies, and it was not the winning bid.
Oh my gosh.
Crazy.
Wow.
So the market's crazy.
It is.
Oh,
but you can still get into a home, people listening out there.
You sure can. But something and Leo and I were talking about this morning as well. The market is crazy, but there are still bargain spots.
Yeah.
There certainly is still relative bargain spots in the market. And you work with, someone like Leo and someone like you, Liz, that know the market. The overall, Eastern Massachusetts, Southern New Hampshire markets, Rhode Island markets, so that you can say, hey, look, here are the areas that you can go buy a house today in and not get bid out of control.
Right.
So,
right. Yeah. I agree 100%. There's, especially even just looking at days on market, like that doesn't, before like 60 days on the market was like, oh, no big deal. Now it's like, oh my gosh. So there's still opportunities in situations like that.
Absolutely.
Mm-hmm.
So Leo, if you, go ahead.
Yeah. No, I just curious too. So, I mean, Dan put up a good point. There's like definitely deals to be had everywhere, right? I mean, like in the city was super hot, like before COVID, like 2019. And then now it's like taking a standstill, whereas like the suburbs have picked up. I mean, I think that's pretty interesting to see. But just also curious, Liz, I mean, if there is like a big like difference for you as an attorney to handle like maybe deals in the city versus the suburbs?
So we definitely just have seen so many more clients, going under contract in homes in the suburbs. A lot of my investors are like in the city big time because they're like getting deals that they never imagined they could in the past. But I would definitely say that the shift has been, so everybody, I feel like a year ago, people were talking about the shift and like, oh, the market's going to change. And it has changed, I think, just in terms of the types of properties that are, more popular now. I don't think you're going to see that 50-person open house, on the street in South Boston. I don't think that's going to happen. Potentially it still could, but right now I feel like it's more the suburbs. And just COVID we expected it to change a lot more things, but what has not changed is the closing. So we still have to physically have you present in our office to do a closing. Obviously, CDC plus precautions are made, but for those people out there who are curious to see if it's changed in any way, it really hasn't. A lot of the upfront paperwork was always digital before working with Dan, but now it's unfortunately the closing has not been able to go digital. Some documents, but not all.
Right.
I found myself running back and forth between attorneys' offices and cars in parking lots to get documents signed this year.
Oh yeah. So for those of you who don't want to do a closing outside and on the roof of your car, our office is open. You can close in a conference room, but we can't close elsewhere. So before, like we would literally, I could be in 3 or 4 registries of deeds in a certain day. I would be going from Salem to Dedham to Boston. And now everything's just happening in our office, but at least we can have people upstairs, which is nice.
Nice. And just a follow-up question too, Liz. I get this question sometimes, like from buyers, like, do you need an attorney to buy a house?
Great question. So if you are getting a mortgage, yes. So in Massachusetts, our legislature has deemed the closing and the sort of conducting title and acting as a settlement agent that's considered the practice of law. So if you're coming from another state where like I'm from Miami, I'm from Florida, we don't have attorneys that need to be involved in the transaction. It's a title company. So we kind of act in that role of a title company in Massachusetts. But for the most part, it's so helpful to have not only the attorney who's closing the loan, but also acting as in your own behalf as a buyer attorney. So our legislature has also said that we are permitted to take sort of that dual role approach where we're negotiating the P&S for the client, acting in their best interest, but also doing the closing and researching title and all those fun things for the bank. So we can act in that sort of dual capacity, which is great because clients, especially who are trying to save a buck, will often get a discounted rate from practitioners in Mass if they're doing that dual role. But also you have one team to talk to, which is huge. So if there's anything related to legal, that you call Liz, and it's not that you're calling Liz here and then another attorney who's closing a loan for the bank. So it's nice to have that sort of all in one spot.
Mm-hmm.
That's definitely true, Liz. I find that if you have someone that is a wealth of knowledge across the legal spectrum, it's a huge help, and it helps it working with an attorney like yourself when we're working with buyers that maybe have a complicated situation. So we do some stuff that a lot of lenders don't do, and we've worked with you in the past, Liz, and obviously and Leo knows. So my group is Mortgage Network. We lend in 28 states, but we offer some stuff that a lot of lenders don't offer. We have bank relationships with small banks and finance arms that don't have their own lending team. So we act as their lending teams. So we can look at some stuff that, quote unquote, might be a little bit outside the box, might be a little bit funky. I had a situation this year with a young lady, highly professional, but coming in from Europe, one trade line, good income, but she was told by 3 lenders that she couldn't buy outside of the Fannie Mae limit. And we lent her $1 million. So it was it was really nice, and as a lender to be able to do that. The realtor was happy, the seller was happy, the buyer was ecstatic. She got the home she wanted for her child, right? And that's what we all, the real dream is here. And Leo, and you and I work in this, making sure people can get their dream.
Yeah.
Right. And that's the simple. It's, we break it down to the simple. You handle the legal, Leo will find them the house. I'll figure out a way to get it financed. Everybody wins. So.
Totally agree with that. It's all about the team. And I feel like, again, we're coming out in 30 minutes. So maybe one last word, Leo, but just wanted to say, like, who you work with matters. And when you can find a group of people that you can trust and will collaborate well together, like the 3 of us, I feel like it's something that's special and will make your transaction that much easier.
Absolutely.
Well, with that,
so, Leo, you want to close us out, Leo?
Yeah.
Oh, sure. Well, hopefully you guys back home learned something new today, and or at least enjoyed looking at our pretty faces for the past. Yeah, I mean, these are just some of the common questions that we get. Of course, if you have any follow-up questions, we'd be more than happy to help. I'm sure Liz will share our contact information down below. One thing I will say though, just about the home buying process too. So I wrote an ebook about it. If you want it, I'm happy to send that to you. Just email me and ask for it. And yeah, thank you guys for tuning in, and enjoy our weekend.
Thank you all. Great to see you.
Thank you.
Likewise.
Thank you.